the Mag 7 is correlated to every index in the world. So the Mag 7, I think, is 37% of any index in the United States. And the Mag 7 is also 20% of all the short interest in the United States. So the real lesson is 2008. What happened in 2008? Charlie, you know this better than anybody else. How did Paulson and all these guys make all their money? They shorted the AAA, right? They shorted the AAA bonds, and then they bought stuff down market as a quote unquote hedge. And they did something that was really counterintuitive. Why would I short something that was AAA? Because they understood it was not AAA, it was diluted. In today's world, the way you short the entire market is you short a basket of Nvidia, Amazon, the Magnificent Seven, because it's one-to-one correlated with every index. So you don't have to short the entire index. You just have to short those 7 stocks. Okay. Now that I've shorted the market, that's my hedge. How do I outperform? Well, what do? Well, I go out and I go buy things that are higher momentum and not correlated, like the Mag 7. And this is why our battleground stocks are so important, because it's a measure of risk on and risk off for momentum. We know that 20% of all short interest in the United States is from Mag 7. People chase them because they know that they can short the Mag 7 and get short the index. And then how do I outperform the index? I got to buy things that are high momentum. That is not a crash scenario.